Welcome to TheoTrade. This is Don Kaufman. It's September 11th, 2019, and you are watching the TheoTrade evening video. Well, there's about 15 minutes left inside of the trading day. The S&Ps are up some 17. But if you've watched some of the trade that's kind of persisted the last couple of days, you kind of get the feel that the marketplace very well may be in a holding period until, well, the central bank party really kicks off. That's something that I'm going to cover here in a couple of moments. We get a little bit deeper into this evening's video. Nevertheless, what I'm showing you to begin with happens to be the SPX. This is the expected move throughout the course of the week. Again, I just want to kind of dot these lines over. The upper edge of the expected move, again, the lower edge of that expected move, and effectively where we're at right now. It's not dissimilar to some of the price action that we've seen, for example, in the previous week, okay, or even the week before that. The point that I'm trying to make over here is just because we've seen some rather docile trade, okay, in nearly every recent week, we've actually touched the upper and or lower edge of the expected move. Point in case. Last week, it's a shortened week, but here was Monday, there was Tuesday, nothing going on in the marketplace. Hit the upside of the expected move and really kind of resided on the upside of the expected move to the end of the week. It was the exact same thing in the previous week where effectively we didn't do that much until we spiked right to the edge of the expected move. And again, we can go on and on and on and on. In every recent week, once again, we've pretty much tagged, okay, the upside or the downside of the expected move. The expected move this week was really constrained. We were looking at about a $37 expected move, which again gives us a pretty good probability of tagging the upside or the downside. Just for full disclosure here, I do effectively have a put butterfly on this week to the downside of that expected move, and there it is. So I've actually surrounded just about the 240 strike in the SPX with a put butterfly. Again, that would be bearish expectations. Has a lot to do, of course, with my thoughts about the central bank. Before we go any further, okay, at this point in the game, okay, in this point in the week, push aside some of the action that you've actually seen. Other than maybe the bonds, which I'm going to cover here momentarily. But some of the action in the S&Ps, it's been negligible. And you don't want to really think that one, read into it. Right now, again, we're kind of circling a little bit of a holding pattern, as I said, waiting for what I term the central banker party. Again, that kicks off tomorrow. It's the ECB. But before I go there, there is, okay, some big movement right now. And that movement comes by way of the Nasdaq. In this case, we'll take a look at the QQQ versus, for example, the IWM. And often, I think the best way to take a look at this is to actually use, okay, a comparison chart. So I've actually got a prefabricated style for this. We're going to look at the QQQ versus the spiders versus the IWM. We'll go ahead and click on that. And then we'll actually snap this, okay, right into a 1 year, again, a 1 year daily. And one of the things that we've talked about extensively throughout the course of this summer, and anybody that's been tuned into TheoTrade throughout the course of the summer, I've been talking about, again, this giant, this gaping divergence between, okay, right there on the top of your screen right there, that happens to be none other than the QQQ. And of course, down below over here, this is the IWM, which is representative, of course, of the Russell. Massive, massive divergence in your major indices. In fact, if you're still looking at this, on a year-over-year basis, which I am, this is a 1 year, you can see that the Russell is still down 8% from precisely a year ago, where both the QQQ and the spiders, they're up, but it's negligible. I feel that most of the time when I ask people, I go, what's the market done over the last year? I didn't ask year to date, but what's the market done over the last year? Well, the real answer is a whole lot of nothing. But there's a major move, a major convergence on the way between this Nasdaq and the Russell. And it is, when I say it's in play, just take a look at the Russell today, up again another 2% against a Nasdaq, which is lagging behind, and the S&P is lagging even behind that. Nevertheless, a huge convergence on the way for those of you that have that particular trade on. Okay, let it fly. This is still, again, all right, early on in this particular trade. Just wanted to give you a quick update, again, on that kind of convergence trades, the Russell versus the Nasdaq. The next thing we want to look at, and I term this like Apple over Netflix, okay? Not in my lifetime, but I did want to talk briefly a bit about Apple. Apple breaking out to the upside. Of course, there's a lot of people that are probably going to believe that this is the all-time high in Apple. That would be incorrect. The all-time high in Apple, I believe, is up in about the 233 range. And we are at some of the recent highs, though, nevertheless, inside of Apple. And a lot of this, of course, has to do with some of their streaming service. Nevertheless, is Netflix really getting hit on this particular front? And the answer is it is not. Now, Netflix took some large hits, not only because of their last earnings report, okay, but they've also taken some large hits because of Disney streaming. Nevertheless, this is actually rather entertaining candidate, if you will, right here, right now, for a bullish setup. Now, if you're looking to construct a trade specifically on Netflix, a couple things you have to watch out for. Number one would be the earnings announcement. Back over to the chart here briefly, and you'll see the next earnings announcement is due out like October 15th. Back over to the options chain, if you take a look, well, you might want to avoid like the October 18th expiration. Again, you can see I've initiated a position in the October 11th. That's 30 days prior to expiration, and I am using an in-out spread in this particular case. Why? Well, for the most part, to constrain my risk. Your $2.50 wide spread, a $5 wide spread, even a $10 wide spread is fair game inside of Netflix if you're looking for a bullish position. All right, onward and upward. It's a bond sell-off. Or is this just kind of a blip on the radar screen? Could be something real. Listen, the bonds, we all are watching them, and you see the sell-side activity. However, this is prior to the European Central Bank announcement, which comes tomorrow. And everybody right now is expecting lower rates, lower rates, lower rates. But the irony, okay, is that when the bonds sell off, where do the rates go? Watch. Take a look at the TNX, okay? The TNX is rallying up. Now, I look at this a little bit differently, okay? Listen, this is the interest rate. And the interest rate right now, again, just to quantify this, is at 1.7%. Now, that happens to be, okay, a 10-year, again, a 10-year treasury. The reason that I say I look at this a little bit differently, this is an all-out, like, just crash to the downside of interest rate. And possibly, okay, a little bit, if you would, the bounce, a rip-your-face-off kind of rally. And we may very well see another bout of sell-side activity in here. What I will tell you at this point, okay, too early to tell how we're going to react with the number of central bankers out there. So what I have actually done in this particular case is I have put on, okay, a number of these ratio back spreads inside of the TLT. In fact, we even detailed those ratio back spreads right here in the evening videos and within TheoTrade, again, in incredible amounts of detail. My ratio back spreads are incredibly deep in the money. And I went ahead and I actually unloaded some of those back spreads today. And I'll just give you some quick examples in here of some of those back spreads. In this particular case, you can actually see the TLT trades. We put them on anywhere between a 12 and 13 cent debit, and I've exited one today for a $1.87 credit. Obviously, on a percentage basis, these are fairly staggering numbers. Nevertheless, we've actually left some size on in the event that the bonds continue to see some sell-side activity. Okay, at this point in time, I would not necessarily jump out there, okay, in some new trades. The volatility right now inside of the TLT is still, well, elevated and slightly aggravated. So I'm going to wait till after the ECB comes out tomorrow, okay, and very early in the day, very likely executing, okay, either a risk twist, okay, or a full-fledged infinity spread inside of the TLT product. The infinity spread, what would it do? Okay, it would actually position us for a move higher or lower, a substantial move higher or lower inside of the TLT. That's something you want to look for literally tomorrow morning. For those of you that are joining us live in the TheoTrade chat room, I will cover that in some detail. As I said, the central bank party kicks off tomorrow. It's Mario Draghi. Okay. Effectively, they're expecting deeper negative interest rates. What else? Possibly the onset of the bond buying program. When I call this the central bank party kicking off, listen, there's the ECB, there's the Bank of Japan, there's the Swiss National Bank, the Bank of England, and of course the Fed. They're all coming inside of the next week. Last, but definitely not least, there's some major rotations. Twitter, Costco, Walmart, Starbucks, Microsoft, XLU, Twitter. This thing has been one of the most beloved products out there and just really can't catch a bid in the last 3 days. If you take a look at Costco, very similar, some heavy sell side activity in Costco inside of the last couple of trading days. The reason I'm putting Walmart on here is Walmart hasn't necessarily seen some of the same sell side activity. But again, if this kind of trade continues, you better believe that Walmart is going to take a hit. Starbucks taking a big hit. Microsoft, which has been completely and totally unscathed, even seeing some sell side. There's the closing bell. Last but not least, another area that you might want to consider if, again, some of this rotation kind of continues, like we're seeing, would be inside of the utility sector, a bearish position in the utility sector, frankly speaking, which popped back up today. All right. The last thing, as I said a moment ago, it's last but definitely not least. Well, I do have one more thing for you. One thing that's got us kind of scratching our heads here the last couple of days, the VVIX, the volatility index, it remains bid. Why? It's a great question. This is effectively, professionals, they're hedging in the VIX. Why? Possibly because the central bank party kind of kicking off. More to come in the next few days. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.